Welcome to Empowered. I'm Elizabeth Naumovski. How many times have you called or walked into a bank or financial services company and been talked down to? You hang up or you walk out being unheard. Or you asked a question only to be upsold a product that you were not even asking about. It's happened many times, even to my mother. And guess what? She's not alone, and neither are you. Today, we're discussing humanizing finance to empower lives, and I'm joined by Shalicia Harris. She's the founder and CEO of In Charge. Shalicia, welcome to Empowered.
Thank you for having me, Elizabeth.
I'm so excited to have you here today because you have created this one product
Yeah.
called Hey Kira.
Mhm.
And I want to know first of all, what is Hey Kira?
Yeah.
And what inspired you to start Hey Kira? And how did your own experiences shape your understanding of the gaps in financial services?
Yeah. So, Hey Kira is a platform that allows individuals to put some data in about themselves, anything they know high level, not a lot of deep details. And what we do is we take that data and we give you 5 key pillars of personal finances and help you understand those key areas so you can make better decisions about your money and understand how there are trade offs between different aspects of your finances and how one decision actually impacts the other.
So, what are the 5 pillars then?
Yeah, the 5 pillars are debt, housing, financial resilience, investing, and credit worthiness. And that we call the foundational elements of anyone's finances, regardless of if you're at the beginning of your financial journey or you're at the end. Those 5 areas are still going to matter based on how much you're spending. Are you over leveraged in any way? And your credit worthiness, we know that's where you're allowed to really, tap into things like buying homes and accessing different opportunities. And that's why all of those pillars are really important no matter your phase in the financial journey.
What about risk tolerance? Does that play into any of the pillars as well?
It does play into the pillars, and we know credit worthiness as it is today with your credit score doesn't necessarily portray risk tolerance for everyone. We know entrepreneurs like myself have much higher risk tolerance than others. And that's one aspect of someone's finances that you can't really just put a number to. And that's why having real good financial conversations with your financial advisor or with someone that you really trust is really prominent. And that's where Here comes in to level that playing field between the two of you. So when you start that conversation, you're both on the same page.
I like that. I like
Yeah.
that a lot because in this day and age, everyone's downloading apps
Mhm.
and everyone is super busy.
Yeah.
And I think it's important to hire a professional
Yeah.
for all the major things that you're doing in life.
Absolutely. Absolutely.
So, what do you think is the real gap between financial services and consumers? Because there is a gap.
Mhm.
And why do so many people feel powerless in these systems as well?
So these systems have been designed over time based on the needs of consumers. And one of the biggest challenges is that they haven't fully evolved into where consumers have evolved over the years, especially from a service perspective.
Mhm.
So we've all been accustomed to getting the right ads shown to us and this deep level of personalization before we even commit to anything. And that level and that standard is something people want from financial services. And that's where the big gap is because they're not there. They're just looking at how can they get their product to you without knowing what are the things that actually marry you to that product and actually service you in the right way.
Yeah. So, what are some of the biggest trade offs that you believe people make with their money without even realizing it?
So, one of the biggest ones is investing in the future. And I think as we see the housing crisis sort of happen, a lot of people don't have money to access the market, especially young folks today, like myself. Like, how do we get into the housing market? Well, housing is something that's for very traditionally for a long time. That's how you made your money. That's
Mhm.
how you built wealth. And that's still a very, very valid way of building wealth. But today, if you can't access a market like that, there's still other ways to build wealth, like mastering, investing and having someone do that for you and with you, right? So you're still a part of that process.
Okay. So, when we
Mhm.
come back, we'll discuss more about this. So, please don't go away. We'll be right back. Welcome back to Empowered. I'm Elizabeth Naumovski. On today's episode, we're discussing humanizing finance to empower lives. Shalicia, before we went to break, you were talking about young people, their goals, and buying homes.
Mhm.
And, I want to talk about this right now because most people in their 20s want a home.
Yeah.
However, the reality of it is, when I was in my 20s, I couldn't afford a home.
Mhm.
I waited, well, because I could afford it when I was in my mid 30s.
Mhm.
Um, you know, everybody wants something instantaneously now. Everybody wants everything very, very quickly. Why is that?
I think a lot of that has to do with the access we have to fake people's lives on the internet
True.
and through social media. And that, I think, is a huge driver of a lot of instant gratification. And that's where people fall into a lot of scams, whether it's different crypto scams. We've seen that in the
Hmm.
past couple of weeks really blowing up a little bit. People falling into different investment scams.
Well, there's romance scams as well that cause all that too.
Absolutely, absolutely. And it's that kind of instant gratification is what I think is setting everyone back because they just want to do one big thing and then have one big result after it. And the truth is, we don't often see the many failures where actual and real learning and real growth happens. And that happened with me and my money. And one of the biggest things I think that happened to me from an instant gratification standpoint that wasn't instant gratification is when I decided to step away from my full-time job to pursue building this business and change the way people engage with financial services, I continued to contribute to my investment accounts on a monthly basis. Just let it be and let it be automated. And I got stuck in a pickle few years into this journey, 2 years into this journey, and there was that money that had more than tripled in value. And it was just because I made a good financial decision 2.5 years ago to set this up, let it, set it and forget it. And here we are that where it's bailing me out of a particular situation.
I love the fact that you talked about that because in 2019, I started the $5 per day
Yeah.
savings challenge.
Mhm.
And this is why I started it because I thought everybody's running out buying their breakfast, buying their coffee, buying whatever it is on a daily basis. Take that money, set it aside.
Mhm.
We all need emergency funds. And I'm
Yeah.
I'm so happy that you said, yes, you were putting away X amount of dollars per month. And I think everyone needs to do that.
Mhm.
Whether it's $5, $10, $50, $100, $5,000, whatever it is that you can afford at the time, put it away
Yeah.
and let whatever the investment is compound so
Mhm.
that when you do get into a really tight financial situation,
Yeah.
you have that emergency money there that'll save you and you won't go into debt.
And that's part of our pillar of being financially resilient. What are the systems that you set up for yourself that allows you to fall into a softer place than just falling straight to rock bottom? This is going to help break that fall and help you actually bounce back a lot faster.
Actually, that's how I bought my house as well.
Hmm.
I started putting money aside on a monthly basis,
Yeah.
and I actually accumulated enough that I had a down payment for my house.
Hmm.
So, it helped me as well.
Yeah. Yeah, absolutely.
So, what's one way our viewers can start closing the gap in their own financial decisions today? I mean, we just talked about putting away
Mhm.
money on a monthly basis.
Honesty. Radical honesty about your money. And I think you have to look at it in two ways. At the end of the day, money is emotional and it's a tool that we use to soothe ourselves in a lot of ways. And so is buying a home for a lot of people, very emotional, but it represents things like stability for them, that real depth of ownership. But as long as you get to that point where you can separate this is an emotional decision for today and this is a decision for my future, take be honest with yourself. And I think that's really the first step. And that honesty allows you to look at your numbers from less of an emotional standpoint and more of this is an honest picture of where we are today. And today's picture does not have to be tomorrow's situation. And that's where Hey Here comes in with her financial snapshot is again, you just put some honest numbers in about yourself and Hey Kira will show you where you are today and give you tips and tricks on how to get to where you want to tomorrow.
Okay, so when we come back, we're going to discuss more about what you're doing and your pillars. But I love the fact that you talked about money being emotional. So please
Yeah.
don't go away. We'll be right back with a little bit more of what we've been discussing. Welcome back to Empowered. I'm Elizabeth Naumovski. Today's episode, we're discussing humanizing finance to empower lives. Okay, so just before we went to break, we were talking about money being emotional.
Yeah.
And I think one of the key things is people need to understand that money doesn't have emotion.
No.
And we really need to separate ourselves from the emotion and just look at it as a tangible being.
Yeah, 100%. And that's why humanizing finance for me is so important and how I bring technology into that space. Because a lot of the activities people have every day with their financial advisors, and when you walk into a bank looking for help, it's still very monotonous, but that person is sitting there with those emotions bubbling and bubbling and bubbling. And the financial advisor has to get through all of this information, all this, compliance stuff at the beginning before they can even turn to you and say, Elizabeth, how do you feel about the situation? And tell me how you want to feel when you get to that point of, I've made it or I've achieved my goals. And that is the goal of Hey Kira, is to eliminate all of that stuff at the beginning so we can get to the human side of things. And having that financial advisor or financial expert help you understand that money is a tool and your feelings are valid, but how do we allow that tool to work for you to get to that ultimate feeling, an emotional state that you actually want to be in?
I want to comment too about the emotional state of money
Yeah.
because a lot of people will go out and I want to buy this for myself. It'll make me feel better.
Hmm.
And the problem is they get deeper into debt.
Yes.
And we need to stay away from that. Making more money will not make you happier.
No.
It'll just keep you spending the same way and you'll still get into deeper debt.
Hmm.
So we really need to remove that whole emotional aspect because it won't make you happier.
Yeah.
And if it does, it's just a very short period of time.
It's true. I don't remember exactly where the study comes from, but I remember reading this stat that said when people win the lottery, a year later from that point in time, after they've won the lottery, they're actually just as happy as they were at that beginning point in time. So again, it's how do we relate to money is directly tied to how we are doing ourselves emotionally, and that's part of the work we have to do. And maybe your financial advisor is someone that's here to help you. And maybe that's the next evolution of that role in general is how do we help people bridge that gap, put the emotions to the side, and work on the tool itself.
So, why don't you share an example with us of a time when a client felt stuck where they were stuck in the system, and how did you help them find clarity?
So I myself don't necessarily deal with clients directly, but before I really turned this into technology, I was testing this process out, doing some financial coaching on the side. And I had this client that really, really wanted to access, buying a home. And we said, okay, let's look at what it means to own a home and all the other potential things that could potentially go wrong in that scenario. And what happened is we really looked at the cost of home ownership versus the cost of renting, which she was doing at the time. And fortunately, she was in a great situation where her rent was really low and her income just kept going up.
Mhm.
So I said, no point in over leveraging yourself at this point in time. And let's put another plan in place. Let's make sure you're financially resilient. So when you get into home ownership, you can actually be okay with if your furnace blows up in the middle of winter, you can afford to fix that. And being able to access that, it really turned the nose from her mortgage. Like she didn't have enough credit. in order to have a high enough credit score for a good mortgage rate. And that was the biggest barrier. And we turned that into a different opportunity for her while helping her build her credit score at the same time. So that's something that the system can get you stuck in. And my parents experienced that when they first moved here to Canada is we couldn't access a mortgage regardless of how much down payment we had because we had no credit score. And how do we build trust in the system and how do we understand that system in order to take advantage of it?
Credit scores are very important for everyone,
Yeah.
whether you are married, single. Women need to have their own credit cards. They
Yeah.
need to be able to create their own credit score so that if anything goes wrong, they can move on. So please don't go away. We'll be right back and we'll have a little bit more financial discussion. So, in a few moments. Welcome back to Empowered. I'm Elizabeth Naumovski. I'm joined by Shalicia Harris. She's the founder and CEO of In Charge, and we're discussing humanizing finance to empower lives. Okay, so what happens when people take control of their finances? Obviously, it's very positive, but how does that ripple into other parts of their lives?
It's confidence. Confidence to know that I can do anything because, like we talked about, money is just a tool at the end of the day. And when that tool is in its best shape possible, you can take the risk that you need to take, whether it's starting a business, whether it's, knowing that you can go on 2 or 3 vacations per year very comfortably. And that confidence then trickles into other parts of your lives, whether you want to move forward with your career, you want to take a bigger risk. That allows you to know that, hey, I'm in control of one thing. And when everything is not falling apart and you can hold on to control of something that feels so important, that is important in today's society, then you can actually go ahead and move forward with doing anything in your life. And that's where the floodgates of opportunities really open for you.
So, Shalicia,
Mhm.
what's one question every person should ask before making their financial decision?
Before making any financial decision, it's how does this decision benefit tomorrow's Shalicia or tomorrow's Elizabeth? Because today is fleeting. We can make a decision today, but if that decision doesn't have a positive impact on tomorrow, then that decision's not the right decision for you. And sometimes, like we talked about money being emotional, maybe you want to treat yourself sometimes, but that's a plan. Put that treating yourself into a plan. And that's how you can make a really good decision is putting plans in place, no matter how small they are, and plan to have fun. I know people think financial plans are just about, oh my God, we just need X amount for retirement. But think about what you want to do in retirement.
Yeah.
Do you want to go on a cruise 3 times a year and plan it around that, not just this big lump sum of money, because all that money is going to do is draw down through the end of your life. But how are you going to take that money and create the life experiences that you want? And that's how I make life decisions. And that's how I think everyone should make life decisions, whether it's a risk you're taking today for a benefit for tomorrow, like myself. I took the risk to become an entrepreneur, and maybe that risk isn't going to pay out. But if it does, it is an incredible, incredible bonus. And that is going to create the life that I really want. And so if today's decision isn't benefiting tomorrow, then I would question it.
I love the fact that you said have a plan
Yeah.
because a lot of people do not have goals or plans.
Mhm.
It's like, oh, it'll work out.
Yeah.
I've spoken to many women. I'm not worried about retirement. It'll work out.
Mhm.
And I said, well, I worry about retirement.
Yeah.
I save. I've worked.
Mhm.
I worry.
Yeah.
So what do you say to people who just say, I don't have a plan. It'll all work itself out.
Everything is always changing. And if you don't have a soft place to land, especially as women, um, we know that there are additional barriers that we have to overcome within our own lives. Like it's much easier, for a man to walk in and get a job somewhere and get a really high paying job. Very, very much easier than it is for any woman. So, how do you set yourself up for success by taking care of future you? And in that process, that becomes where your resilience comes in and that confidence comes in and that ability to know that you can do anything comes in. And, it goes back to women that, everyone talks about having mad money. I don't know if that term is familiar to you, but anyone in a relationship, you sort of stash that money to
Yeah.
the side. Everyone has a different term for it. And you're able to come out of that at the end of the day. And that's what planning does for you.
Thank you, Shalicia.
Mhm.
Shalicia has some words of wisdom for you. She says, your financial data is a flashlight. Turn it on to ask richer questions, light up the dark room of uncertainty, and navigate financial systems with confidence. I'm Elizabeth Naumovski, and I'm here to empower you and make frugality fashionable. Thank you all for watching. I hope you enjoyed this episode. Bye for now.